So welcome to Learning Objective 2. Hallelujah. Building on everything that you've learned so far, we are going to start assigning costs to work in process, okay? So remember, everything starts off as raw material costs and factory labor costs and manufacturing overhead costs. Um, but that's the starting point, right? The step after is to start working and creating the products. And that's basically what the work in process is. So when we're ready to actually start making a product, we need to start moving numbers. We start moving um, numbers over to the work in process inventory, and we start taking it away from our raw materials, labor, and overhead accounts that you're going to see here. Okay. Um, you're also going to be learning about how we keep track of things. Remember, paperwork is very important in accounting, regardless what area you're in. It's a matter of making sure you have a source document. Um, and so basically we use, and you're going to be learning about this job cost sheet, which is a very, very important piece of the puzzle here and how accounting is done. All right. So you're going to pay attention as we look at a job cost sheet. This is an illustration in your book as well. And these are going to be filled out over time. Matter of fact, as we get through this chapter, all of this will be filled out and you'll see how it works. So here's your intro, right? Job cost sheet, actually, right, it's by number. So the job number would go here. You'll see the item and the quantity and other types of things that are listed here based on the particular job, okay? Then you'll see there's specific requisitions for direct materials, labor, and overhead, and those will be used on particular dates to get the job done, right? Those manufacturing costs are kept track of and totaled here, and thus, based on the number of units you are actually creating from this job, you can actually get a unit cost. Look at the total cost of the job divided by the number of units you've made. So you're going to see this sheet be filled out as we go through the process here. Okay, so you don't have to like, oh my God, I got to memorize this. No, you'll just see it over and over again and you'll see how it works. And it's pretty straightforward after a while. All right. The first thing that happens when you need to start getting something done is you need to requisition the materials. Okay, you need a certain amount of materials to get a job done. All right. So the first thing that we look at are the raw material costs, and we need a written authorization for that. That's what the requisition slip is about. We need X amount of this for this particular job. Okay. Most of this particular requisition is going to affect the direct materials account. However, there may be some of it that involves some indirect materials, which would be manufacturing overhead. For the most part, on a straightforward example, it's going to affect direct materials. So here we have the materials requisition slip. We need to have the materials delivered to the assembly department. Okay. What materials? 200 of these lithium batteries. Okay. Have to be delivered to the assembly department because it has to start being assembled. All right. These batteries cost $5 each. So the total amount of the requisition for these batteries is $1,000. Notice that it's a slew of signatures requested by a certain person, usually in the assembly department, right? It's approved by usually a manager with dealing with materials. It's received by someone in assembly, and then it's costed out appropriately by accounting. So this is how things start getting moving in manufacturing. So here's the illustration. This is something that you'll be turning to again and again and again. Wallace Company uses $24,000 of direct material and 6,000 of indirect material. So what is going to be the entry? Well, in total, you've got work in process inventory is going to get $24,000 worth of that because of the direct materials. Manufacturing overhead is going to be debited 6,000 for the indirect materials. But all of this is raw material. And so the $30,000 credit will be to the raw materials inventory. So how it actually looks, again, this is the entry. This is what it's going to look like when you read a journal. You'll see that $30,000 of raw material inventory has been sent out, right? Because that inventory is going down. But it's being sent to two different places. In this case, the work in process, which is direct, right? Material is 24,000 of that. And then 6,000 of that is going to be part of the overhead. So as you'll see, and this continues to grow and grow and grow over time. Yes, work in process inventory now has $24,000 debit showing those raw materials requested. However, they have to be assigned to the specific jobs. And so this particular company has job 101, they have job 102 here, and they have job 103 that these materials have been requested. So as you see here, of the $24,000 of work in process inventory, as you see, 12,000 of that direct material is going to job 101. Job 102 is allocated 7,000 of that. And job 103 is allocated 5,000 of that. So the 24,000 is broken into the 12,000 of direct materials for job 101, the 7,000 of materials for 102, and the 5,000 of materials for job 103. Okay, so yes, it is all work in process inventory, but it's being assigned to very specific jobs that the company is doing. Something that's very interesting, and I like this story, as you know, I like these stories in our book. You know, it's very, very important how important companies need to know their costs. It's very, very good. But how important is it to know the costs of your competitors? Ooh, how much do they actually? How much does it actually cost them to put their product together, particularly if you want to compete against them? Well, that's what iSupply does. iSupply basically will tear apart an electronic device and tell you what it would cost to replicate it specifically. So in this case, they took a smartphone that had over 1,000 different components in it. Okay. And in this particular chart, they have basically broken down the components that they were able to take apart in this iPhone and allocate them accordingly and provide the cost data. Okay. So that's really interesting. That's really interesting. So here the chart shows that a recent iPhone model costs about $170 in parts. Okay. Assembly of those parts is another $6.50. Okay. And so basically, you know, that's very, very important. But what it doesn't tell you is all the additional costs that are not production oriented. Research, design, marketing, selling costs are not included. But it does give you the very specific cost components of the particular iPhone. And this is extremely important if you want to compete, because you need to make sure you're competitive on costs. Otherwise, you're not going to be able to sell what you want to make. Right? So it's very, very interesting how important costs are. All right, so now let's take a look at labor. Remember, manufacturing costs, the raw materials, the factory labor, the overhead, all have to be allocated, all have to move into work in process inventory before it continues. So it moves a little at a time. So again, we assign the labor costs based on another document, the tickets, the time tickets, how many hours of work is needed to complete the job, right? And so time tickets would include, what employee worked, the number of hours, what account is going to be charged, and the total labor cost, which of course we need to know for each particular job. And so what you have here is you have John Nash, who's the employee. Um, this person started at 8 o'clock and stopped at 12 o'clock. So you had 4 hours of work on job number 101, okay, at $10 an hour, which means the labor costs associated with this employee's work is 40 bucks, 40 bucks. All right. So what does this mean? Well, that also needs to be allocated as you see. So here's the illustration on labor. Okay, all the time tickets are sent to payroll and they look at the hourly rate, obviously, and compute the total labor costs. So now what we know is that there are $32,000 of total labor costs. 28,000 of that is direct labor. $4,000 of that is indirect labor. Remember, indirect labor does not directly relate to putting the product together, but supports all of that. Manufacturing costs are about direct labor. So this will go into overhead, as you'll see. So that means that on January 31st, they would debit the work in process inventory for the $28,000 of direct labor, because that's what's going into creating the product. The indirect labor will go to manufacturing overhead. But labor, total factory labor will that account will be declined by 32,000. It just is broken up into these two parts. Okay. So as you see here, you have, in this case, you have used all 32,000 of the factory labor that was allocated for this company, but into two areas: work in process inventory, the actual work on the product itself, right? Plus 4,000 in manufacturing overhead, indirect labor. Okay, so this is being allocated in two different accounts. So how this works yet is, again, work in process inventory is getting a debit for $28,000 for the labor. Okay, that's what you saw on the previous screen here. Work in process inventory, 28,000. That's this account right here. All right. So this 28,000 for direct labor has to, again, be assigned to each of the specific jobs. Remember, we have 101, job 102, and job 103 all requiring labor. All right. So when you examine those particular tickets, what you'll notice is job 101 required labor of $15,000 total based on two separate work days for this. Job 102 had total labor, direct labor of 9,000. Okay. And job 103 had direct labor of 4,000. All right. So again, the 4,000 and plus the 9,000 plus the 15,000 is that $28,000 number that has been assigned to the work in process inventory. Okay. And there you see the breakout per job. So this is the end of learning objective 2. And it's going to ask you basically to learn how to do these entries for manufacturing. So here we have Danielle Company. They're working on two particular jobs. Okay. job number 120, job number 121. And as you see, um, materials, direct labor, and overhead are listed for each particular job here. So now what you have to do is prepare the entries as they are assigned to work in process inventory. So again, direct materials, you have 6,000 of direct materials for job 120, 3,600 for job 121. You would debit the work in process inventory for $9,600. That shows those materials going over to work in process inventory and coming out of the raw materials inventory. For direct labor, you have 4,000 for job 120 and 2,000 for 121. So in this case, you have a debit to work in process inventory for 6,000, and you're going to reduce factory labor by 6,000. So this is how the money moves from the base accounts into the work in process account. And lastly, you have manufacturing overhead for both jobs as well listed here. That's going to entail a debit of 7,500 to work in process inventory, and you're going to credit the overhead by the same amount. Okay, so I'm going to stop here, go back to our main screen, and ask if there's any questions.